My main goal on this channel, my main goal, as you guys know from day one, the reason why we are exploding, the reason why the channel has been rated as one of the fastest growing YouTube channels is because my main goal is to be able to teach you how to fish instead of giving you fish. My main goal at the end of the day is to be able to teach you how to generate your own signals in Forex trading. And in line with that, I've taught you guys about candlestick patterns. I've taught you guys about support and resistance. I've taught you about price action trading and a lot of things. But now, when it comes to support and resistance, there are some few techniques. There are some few techniques you need to use. There's a few videos. I think that video is more than 1 hour or so that I've already made a detailed video on support and resistance. So you need to watch that video to be able to understand what is going on, to be able to follow up with this one. Although you can still watch, but it would be better if you watch that one. But now on this one today, I want to also talk about the how to trade support and resistance. I mean, what are the best method or the only methods you can use to trade support and resistance? Because when it comes to trading, there are some things which are standard and you can't change it. All right, no matter your level of expertise, no matter how dumb or how experienced you are, there are standards in Forex trading that you just need to follow. That you just need to follow and trade them the way they are. And that is what we're going to be covering on today's video, which is how to trade support and resistance. How do you trade on support and resistance? How do you react to the chart once the market gets to support and resistance? All right. Hello everyone and welcome to my channel. My name is Sekolov. On this channel we talk everything about trading, business, personal finance and tips to help you stay profitable as a Forex trader. So if this is your first time coming to my channel, then hit the subscribe button below to subscribe to the channel so that you can always be updated when I come up with content like this. What do we have on today's video? We're just going to be going straight to the point. You can see on the table of content. On the table of content, we're going to be talking about how to trade support and resistance. So we'll talk about how to trade support and resistance. Then we'll talk about the bounce and the break method. Because when it comes to trading support and resistance, there are two methods. You can either use what we call the bounce method or use what we call the break method. So you have the bounce, like throwing a tennis ball on the wall, it bounces and comes back, or throwing something that has to break another surface. So you have the bounce and the break. All right. So we'll also talk about that. Then we'll talk about the bounce method on consolidating method. Then we'll talk about the break method of trading support and resistance. Then how to determine fake breakouts. Because this is something that people neglect, but it blows out a lot of accounts. People have suffered premature death. Let me call it premature death. People have suffered premature death in Forex trading when they don't know about fake breakout. When you see something and you think, okay, this is a breakout, when it was just a fake breakout. We shall also talk about that. All right. So now let's see. I like to use a red. So let me change my color. Okay. So let me go here and change my color. Good. So on this slide, you say, okay, the bounce method of trading support and resistance. The bounce method of trading support and resistance. Anytime you hear of the bounce method of trading support and resistance, don't get confused. This is just what it means. For example, if I have my support and resistance, right? If my chart is bouncing here and here, the bounce method of support and resistance, it means if the market is on resistance, I'm waiting for it to come back to the support. When it comes to the support, I buy. And when it goes back to resistance, I sell. When it comes to the support, I buy. So I'm just waiting for it to bounce on that level. That's why it is called the bounce method. Because bouncing is like, okay, you have a level like this, then the market comes here and bounce here. You can see the arrow comes here and bounce. And when it goes up here, it goes up there again and bounce up there and goes down, bounce again. So that is why it is called the bounce method of trading support and resistance. Because there is high probability, remember, I'm using probability. There is a high probability that the market will change direction on that level. There's a high probability that the market will sell once you get to that resistance. There's a high probability that the market will be in the buy zones when it gets to that particular support. So that is what they call the bounce method of trading support and resistance. For example, you can see on this chart, you can see here we have EuroCAD. All right, we have EuroCAD. And here we have our major. I've already taught you guys about major and minor support and resistance. Major support and resistance are used for trade execution, while minor support and resistance are used for trade management. I've already taught you guys about that one. If you missed that already, or if you're watching this one without watching that, make sure after this video you go and watch that video, or watch all the videos on the playlist. All right, so we have our major support here and we have our major resistance here. Good. Once the market was here on the major resistance, we're just waiting for, if we didn't sell here, or maybe if we missed the signal, we're waiting for the market to come back to what? To our major support. We buy again somewhere here. We buy, then we stay again, we wait. We wait again. Since we are using the bounce and the market is in a sideways. Remember, this is a sideways market. All right. So now, once the market comes here, we buy here. We're waiting for the market to get to this level. The market comes here, we sell. We sell somewhere here. The market, once we sell somewhere here, the market comes here again. We buy somewhere here. We're waiting again. The market goes up, we sell. And this is a live chart. I took this this is a live chart from MT4. All right, so you can see the market has been respecting. We saw here, it came here, we bought here, it came here, we saw here, it came here. So we are buying at our support and selling at our resistance. Buying at our support and selling at our resistance. We're just doing it. So we're just waiting for it to bounce. Once it bounces, we buy, it bounces, we sell. That is the bounce method of trading support and resistance. All right, there is nothing more. There's nothing more. So you just have to understand and you know when to use the bounce method to trade support and resistance. And how do you use the bounce method to trade support and resistance in a trending market, or the break method of trading support and resistance? Now, we've already spoken about the bounce method of trading support and resistance. Now let's talk about the break method. The break method, when the market actually break, or when the market actually broke the structure on this particular level. Because here, this is a clear market. The same explanation I was explaining on the other chart. This is the part of the chart. Then here, the structure was broken somewhere here. And instead of having a sideways market, now we have a downtrend. All right, instead of having a sideways market, now we have a trending market, which is a downtrend. Remember, on our previous video, we did talk on how to trade a trending market, on how to trade the trend. With the trend here is a sideways or a ranging market, a ranging or a sideways. All right, a sideways market. Then down this one instead, we have now what we call a downtrend. So you see a change in structure and a change in strategy, all in one video. The market was moving from a sideways or a consolidating market, then boom, out of a sudden the structure is broken, and now we are trading on a downtrend or on a trending market. This is a trending market at this particular point in time. Good. The structure, the strategy we were using here, there are two things, two in one in this video, two strategies combined. Here we're using the bounce method, the bounce strategy of trading support and resistance, where once the price comes to our support, we're waiting for it. Once the price comes here, we're waiting for a confirmation. That confirmation can be candlestick pattern. We're waiting for a candlestick pattern, and you can see here we had a shooting, we had a hanging man. We had a hanging man somewhere here, which is a typical reversal signal. We bought somewhere here. The market came up here. There was a shooting star up here. We saw somewhere here. The market came down here. We bought somewhere here. Saw somewhere here. But now, when we saw up somewhere here and the market came here and hit our take profit, there was a buy signal. We bought, but the market didn't continue. So this structure didn't go up. The market didn't go up again. What happened? The market broke the structure and then retest. There was what we call break and retest. Break and retest. All right. So the market broke the structure somewhere here, then retest here, then continue going down. So this is where we would have known that, okay, the market has changed direction. And once the market changed direction, and now we are having lower highs, lower low, lower highs, lower low. That is a clear indication that now that, okay, we are now having a downtrend. And since we are having a downtrend, the only signals we should be looking for, should be sell signals. All right, because we're having a downtrend, we should all be looking for sell signals. And for you to trade the breakouts, remember we're talking about the break method of trading, the break method when the market has actually broken that structure. So if you are trading, let's just assume the market break the structure but up here. If for no reason you see the structure broken on a resistance, wait for a retest. All right, always wait for a retest, because a retest will show you a confirmation that, okay, now the structure was broken. the sellers came in, but they couldn't push the market down. Now the buyers are already in control again, then you can buy. And if it is broken somewhere here, you know that, okay, the sellers came in, they won the battles, the buyers came in and they tried to fight a little bit, but now the sellers are still in control. That's why if it is broken here, wait for the market to do this. All right, if it is broken somewhere here, wait for the market to pull back to this particular support. Wait for the market to pull back to this particular resistance, and then you buy somewhere here. As simple as that. This strategy will never fail you. This system of trading will never fail you, because you've gotten your confirmation that, okay, even though the buyers were in control and sellers tried to disrupt the market a little bit, the buyers are still in control. Wait for a retest. Once a retest come back to that buy zone, this is our resistance. Once it come back to that buy zone, that particular resistance will become a support. All right, that particular resistance will become a support because it is already broken. So resistance become a support. And now you only buy somewhere here. Instead of selling somewhere here, you buy somewhere here, and boom. The same thing happened down here. The market came here. This is the same thing. It broke somewhere here, came here, retest here, and boom, went down. So that is how you trade the retest in Forex trading. We're talking about the two methods of trading support and resistance. The first one is bouncing, where the market is just bouncing on support and resistance. We buy here, the market came here, we sell here, the market came here, we buy here, go here, we sell here. So the market is just bouncing, and we're waiting for the market to hit any of the levels, and we buy or sell. And if we buy here, our stop loss will go here, our take profit on the next target. If we sell here, our stop loss will go here, our take profit on the next target. We just keep doing that. We're using the bounce method. But now the breakout will come in. If now we are using the bounce method and it becomes a point in time, the chart comes here, and instead of bouncing, it breaks and go up. That is now, at this point in time, we will need to now implement the breakout strategy to trade at this particular level. So you should be dynamic, you should be flexible, you should be smart enough to know when there are these changes so that you can easily catch them. All right. Now, let's go to the next point, which is the next point is now the bounce and break method on trading support and resistance on a trending market. What I show you guys, the example I show you guys was on a consolidating market, but now this is a trending market. The same thing will apply on a trending market. We're still going to be able to have our support and resistance. We're still going to be able to have our trend lines and the market direction. Here you can just see very, very clearly. I don't even need to tell very, very clearly. We're having higher lows here, higher highs. We had higher lows, we had higher highs, and we had higher lows. And anytime you're having higher highs, higher lows, higher lows, what is that? That is a typical uptrend. All right, that is a typical uptrend. And what did I say? I said if a market is in an uptrend, only look for buy signals. And if the market is in a downtrend, only look for sell signals. That is why they say the trend is your friend. All right. And here you can see if we bought somewhere here, TP here, this is a risk to reward of about 1:5. That means for every $100 we risk, we'll be having $500. All right. So for every $100 we risk, we'll be having $100. Or for every $1,000 we risk, we'll be having $5,000. Because we are trading with a trend. Trading with a trend gives you the ability to be able to have high risk to reward. All right. If you want to tell me you are a profitable trader, the first thing I ask is what is your risk to reward for all your trade? If you just tell me my risk to reward is 1:1, I won't even talk to you because I know you're a loser. You won't end up ever making any money in Forex trading because you need to have at least 90% of winners in Forex trading. And that is practically impossible. But now with the risk to reward of at least 1:3 or 1:4, 1:2, if you have just 30%, if you are just 30% of the time correct, you will still come out as a winner because the few winners you have, they are more than the losers. They bulldoze all the losers. All right. So that is why they say it is not how many trades, it is not how many winners you have in Forex trading, but how big is your winner when you actually have a winner. All right, you can have 80 trades that are winner, but one trade that I have which is a winner is more than all your 80 trades. So it is not how many trades you have in Forex trading which are all winners, but how big is your winner the time you have it, or how big is your winner. All right. So get that point very straight so that when we are moving ahead, you'll be able to know. So on trending market, you do the same thing, the same strategies apply, but now you have to trade in the direction of the market. And if the market break, anytime the market break your structure, if the market break your structure here, always wait for a retest. So a break here, wait for a retest. It will normally retest that level, then continue going down. And if it breaks up here, wait for a retest, then it will continue going up. So you see, if it breaks here, wait for a retest, then sell instead. If it breaks here, wait for a retest and buy. That is now using the breakout strategy to trade on a trending market. All right. So I hope that point is very, 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 very clear. Good. So now this is the most important thing when it comes to trading support and resistance, or trading the bounce method, or trading the breakout method. Is how to determine fake breakout. You can call them fake breakout, or you can call them fakies. Sometimes we used to call them fakies. So how do you determine them? So you can see on my chart, this drawing is very, very perfect because I like to consider this like a whole zone. If you don't, you should always consider your support and resistance as zone, not just as lines. Because here I can consider this as a whole zone, then I'll consider this as a whole line. So this one will be what? My support zone. All right, this will be my support zone, and this one will be what? My resistance zone. See what happened? The market came here, break this particular level. You can see break this particular level, even broke down here. But somebody would have thought, okay, the structure is already broken. I need to run and I need to instead sell. But see what happened? The market pulled back from what we call a hanging man. When they pull out from what we call a hanging man, which is a typical reversal sign on a particular zone. So somebody who was considering this level as a zone wouldn't have entered in that particular trap. But somebody who was considering this as just this first line would have known that, okay, the market has already changed direction. Or maybe once the person buy here, the person would have put the stop loss somewhere here. Then what will happen? Stop loss hunting. So what happened here is what we call stop loss hunting. All right? Stop loss hunting. So this is an example of stop loss hunting because market makers, the kind of brokers they call market makers, they can see, they know where they know as a beginner Forex trader, they know where you're going to put your stop loss. They know where 90% of Forex traders will put their stop loss. So they deliberately push the market against you so that they can trigger all those stop losses. All the money you lost will go to them as they are over the counter gains. So they already know your stop loss is going to be there. So that is why they will create what they call fake breakout. You think within you that, okay, the market has already broken that level, or you think within you that, okay, I'm just going to consider this as a line and I'll put my stop loss very tight. That is why they always say, give your trade room to breathe. Give your trade room to breathe, and also know how to place your stop loss. Even if market makers have to push the market against you, you won't be knocked out of the trade prematurely. All right, good. So you can see that was the first breakout. The first false breakout was that one, and here we have another fake breakout. The same thing happened on this resistance zone. The same thing happened here, fake breakout. But now, good, we had this level. Remember, I spoke of on our previous video, I spoke of momentum in the market, or trend strength. You can see that this market was like this. Then after it started dying off, what happened? It should start telling you that they changed. You should start expecting a change in direction. That is the same thing that happened here. See the momentum that the market kick off. See the momentum. Then the market start dying off somewhere here. And what happened? Boom. Breakout. This was the re-breakout. The re-breakout occurs somewhere here. You can see this candlestick push through this particular resistance level, and that was the re-breakout you would have been looking for. And what happened after that? The market came back, tested that particular level. What I've explained time with that number. The market came back, tested that particular level, and boom, has been going up ever since. Then price increases. So that is, you've seen on this video, I've been able to explain to you guys how you can spot fake breakouts, how you can be able to see the re-breakout, and how you can be able to trade the re-breakout, or how you can be able to avoid the fake breakout. So this is an example of what we call the fake breakout, or stop loss hunting. All right, stop loss hunting, or stop loss hunting. So I think that point made it to the end of this video, where we've spoken about the various ways you can trade support and resistance. And there are two ways you can trade support and resistance. The first way is through the bounce method, where you just wait for prices to bounce, come back to the support, you buy your target at the next resistance. If the price goes to the resistance, you sell at the resistance, and your target is in the next, your take profit is in the next support, and so on. Remember, you only be buying on the support and selling in the resistance, or selling on your resistance and buying on your support if it is in a consolidated market, if it is in a ranging market or in a sideways market. But now, if it is in a trending market means if it is in an uptrend or a downtrend, then you only be looking for trade in the direction of the trend. So if it's a downtrend, you should only be looking for sell trade, and if it is in an uptrend, you should only be looking for buy a trade. Then we've also spoken about how you can be able to spot fake breakouts. Because you see a lot of times in forex trading, those breakouts are done deliberately by the kind of brokers we call market makers. So they know where your stop loss is. They know where you're going to place your stop loss. So they deliberately push the market against you so that those stop loss can be triggered, and the money, the trade you lose or the money you lost will go to their pocket as their over the counter or their OTC gains. So they know those things. So how can you be able to avoid them? I've also taught you that on this particular lesson. So if you have been able to watch the video to this particular level, or if you have gained something from this video, please hit the thumb up on the video, so that I'll have an idea if you guys are actually getting something from this video. And if you are watching and you haven't subscribed, please hit that red subscribe button below to be able to subscribe to the channel. And if you haven't joined a community of forex traders that are sharing their ideas on a daily basis, then check my Telegram channel below. My Telegram channel is on, that's the only Telegram channel I have. Any other one is a scam. So check the link on the video description so that you can be able to join that channel. And if you are still looking for the best forex broker, remember I said you might know how to trade support and resistance, you might know how to generate the best forex signals, but if you don't have the right tools, you won't be able to trade forex. Like a farmer, it's like being a farmer. You might know everything about agriculture, but if you don't have the right tools, you wouldn't be able to make any money in farming. It's the same thing in trading. So if you want the best forex broker to use, check the video description below. I've been able to come up with the best forex brokers that I've been using for more than 6 years. So pick any of those brokers, sign up, and you'll be able to start using from today. And if you also want to support the channel, or you're just curious about the channel membership, which YouTube has currently stipulated, it just tells you about being a part of the channel or supporting the channel, or if you want one-on-one mentorship from me, or one-on-one coaching from me, or one-on-one session, or whatsoever I can call it, then choose any pack from the channel and I'll be able to see you one-on-one. With that being said, we've come to the end of this video. Share the link, leave your comment on this comment section below, what you've been able to gain from this video. If you have any question, also leave it on the comment section below. And I did promise you guys that I'm going to reply to each and every comment on my channel. Till then, I'll see you guys on another live video. Peace.